Hello, everybody. I am Big Cheds, and it is an absolute honor and a pleasure to be doing this show. This is Trading Wisdoms with Big Cheds. First of all, I would request you please hit that like and subscribe button. Just like to say thank you to the whole Crypto Banter team, the whole community. I love you guys. Most of you know me. I've been a guest on that show with Sheldon, with Ran, Fred, all you guys. You know me from that, and I'm known as a chart guy. I'm known as a newbie helper. I'm going to give you my honest opinion. I'm not just going to tell you it's bullish. I'm going to tell you really what I think. And, we'll get more into kind of my background and all that later. But the point of this show is I'd like to give you some perspective, some analysis. A lot of it is going to be based on my book, Trading Wisdom. You can think of the book as 1/3 trading psychology, 1/3 technical analysis, and 1/3 risk management. And, really what I'd like to do is give you a little bit of an edge, help you understand how to do technical analysis, help you understand how to manage your emotions, and really just have some fun. So, let's get this thing started. So most of you know me mostly from Twitter. You may know me from Twitter. I'm there at Big Cheds. That's where I'm incredibly active. I put out a lot of my thoughts, and I like to think of them as kind of academic observations. So if you're interested in that, check me out on Twitter at Big Cheds. The book is Trading Wisdom. It's available on Amazon right now, 50 lessons every trader should know. The reviews have been exceptional. I'm very thankful for that. So please do check out those reviews. And I've been doing a free series on my YouTube channel, Cheds Trading, on YouTube. I've been doing a free series on the book. So I've been reading one chapter at a time and kind of expanding on my thoughts, just to give you a little bit of extra context. So if you want to check that out, check out that playlist on my YouTube channel. And if you're interested in learning about technical analysis, please do check out Bitcoin Live, the best-in-class educational platform for crypto, where I am a founding analyst. I've been doing this for several years now. That's something that I'm quite proud of. Please do check that out. And of course, later I'm going to give you kind of an overview on the market as well. So we're going to talk about the book. I'm going to give you an overview of the crypto market. I'm going to try to answer some of your questions. No question is a dumb question. I've been there. Trust me. I've made every mistake. I've asked every question. So, hopefully I can help you out a little bit. And then we'll bring on a guest if we can find a guest. Usually there are some great guests available in this space. I always like to talk to someone with a little bit of a different style than myself. But this is Trading Wisdoms. We're going to start out with the book. And what I have up here is I'm going to have the introduction and the about the author section of the book. So if you want to pause it, come back later, you can kind of read these. But I'll just basically give you a brief overview of my background. I've studied classical charting. I've studied Japanese candlesticks. That's Eastern and Western technical analysis. And I've also gone through the CMT certification. I am a CMT level 1. I take it very seriously. It's helped me in my own trading. It's helped me in teaching others how to trade. So, I'm mostly well known from Twitter at Big Cheds. Definitely check out Bitcoin Live. I talk about that. This is also my second book. Trading Wisdom is my second book. The first one is called My Battles with Cancer. I am a cancer survivor, and I published a memoir on that. And the introduction to the book talks about how I started out trading. I made a lot of mistakes, and there were people who came along and they helped me out. And they kind of taught me a few tricks. And as I went along, I learned how to pass those tricks on to other people. I started to grow my Twitter account. I started to grow my YouTube account. Ran actually reached out to me back in 2018. I did Rand's show, Crypto Trader, and really that helped me out a lot back then. So that's the intro and the about the author section. I'm basically a chart nerd. I'm a newbie helper. And I'm really proud to be part of this space. I just published this book. It's been really popular. The Banter team is I love you guys. You really have helped to be successful. So today we're going to be talking about from lesson 3, stay calm under pressure. And that's that's a really important thing to do right now. If you think about the volatility we've had in Bitcoin recently. And I'm going to jump right into chapter 3. And if you do have the book, of course, you can read along. We're in page 13. And there's a quote directly from the book. It says, "The next time Bitcoin drops $10,000 in a day, and it will, try to remember that is a buying opportunity, not a panicking opportunity. So when it's up only mode and it's just riding the Bollinger Band or riding some moving average, it's easy to buy. It's easy to buy all those minor dips. And we'll get into this concept later of a low ball bid where you kind of buy at kind of at a key support level, even with the price much higher. It's harder to do that. It's harder to buy after a big flash crash, right? Because when it's a minor dip, when it's down a few percentage points, you could just keep buying because every time you've done that before, it's gone up. You have to learn how to respond to volatility, and you respond to volatility by being prepared for it. In this most recent Bitcoin shakeout, there were actually a lot of signs of weakening in the daily trend. And if you study technical analysis, a lot of people get confused, in my opinion. They try to think about it as predicting the future, but actually technical analysis is a historical look back. It's a look at historical price action. The goal is to identify the trend, the direction of the trend, and then to identify pivot points or points in the chart at which that trend will strengthen or weaken. And if you can do that, you can identify those key levels so you can take advantage of them if there's a big crash, right? I'm going to show you something later with Ethereum that really makes this point. And with Bitcoin as well, is being ready to take advantage of the panic. When other people are panicking, they're making mistakes, and that's when you can take advantage, right? That's really what it's all about. So the next time Bitcoin drops $10,000 in a day, and it will, try to remember, this is a buying opportunity, not a panicking opportunity. This is directly from the book. Executing this strategy correctly will take a lot of practice, but the payoff is worth it. The ability to stay calm when the market is blood red will help you spot favorable risk-reward setups in an otherwise hectic environment. So after the market crashes or has a big pullback, everyone all of a sudden they're gun shy. You were cocky before, you were ready to throw your money around before and try this and try that, but all of a sudden you're gun shy. If you take a deep breath and you start to look for relative strength, after the big crash, you start to see which of those projects, which of those coins are now making a higher high in the chart, which of those coins are now pushing up and challenging those moving averages, right? Instead of getting frustrated and getting all emotional, you go to work. You say, now there's probably some opportunity after this big A shakeout. So you prepare yourself, you train yourself to actually like those moments because, as I say later in the chapter, and this is a quote from the book, if you are a bull, then pullbacks are your best friend. The more we digest, the higher we go, right? If you're a bull, then pullbacks are your best friend, right? Because you think about a chart that stair steps. It has a consolidation. It goes up. It will come back later, maybe test that, and then come back up and test the next one. It kind of goes up and it goes up, stair stepping. And to do that, it will need to consolidate. It will need to kind of pull back a little bit and churn. And that's what happens is when you churn, when you consolidate, you're shaking out the short-term speculators. You're allowing kind of the day traders to exit their positions. And then you can kind of resume the trend once that supply and that demand equilibrium has been reset. So you need to learn how to stay calm under pressure. Let's see how we're doing on time because there's a lot of stuff I want to do today. We're going to get to your some of your chart requests and all that stuff. Let's talk a little bit more about staying calm under pressure. Here's a quote from my book, and it's so true. And I know you've been there, right? You've looked at your chart and you said, if it drops down to here, I'm going to buy it. I'm totally ready to buy it. And then it does, and you're scared. You're scared, right? You need to stick to your plan, right? Every plan obviously needs to have a level at which you decide the plan fails, your stop loss, right? If your trade is based on the concept of support holding at $100 and that $100 support fails, get rid of the trade, move on. Don't hold on to it. Don't say, let me come up with a new plan. No, take that small loss. So what you're doing, right, you're sticking to your plan. And even if it doesn't work out, you have a minimal loss. So it's okay. Like, don't be afraid. There's a reason it was a good level ahead of time. There's a reason you spotted that level. It's because it was a likely support area, a likely bounce area. You need to learn to stick to your plan. So how do you do that? Maybe write it down on a piece of paper. And if you get that big crash, you can look at that paper and say, you know what? this was a good plan. I'm going to stick to my plan. So, you need to have a little confidence. You need to believe in yourself, and you do need to manage your position, because if you're trying to enter in that type of a volatile environment, you want to make sure you're managing your position and make sure you stick to your stop loss. Your stop loss, the point at which the trade fails. So here's the quote from the book, and how, staying calm under pressure. If you loved these alts 5 minutes ago, you should adore them after a 10 to 20% haircut. Stop chasing the green and learn to love the red. It is Valentine's Day after all. Right? So that tweet, that was from one of my tweets on Valentine's Day, and we had a big alt pullback, and everyone had been loving alt. It's alt season. We're going to the moon. We're at the moon. We're going to Jupiter. By the way, please hit the like and subscribe button. Would appreciate that. Everyone's super enthusiastic, and then you get that tiny little pullback, and you're afraid. What do I do? Learn to love the red. Those pullbacks are where you get a good entry, where you get a better average in your position, where you're buying a dip in an uptrend. That's what you want to do, right? So for this show, for this week, we did staying calm under pressure. So let's give you a little bit of a market overview. I study classical charting, Japanese candlesticks. I use moving averages. I do not use too many indicators, and we may or may not get into them today, but I most certainly will explain them. I want you to be comfortable. I want you to be confident. You should understand there are many different styles of charting. You need to find a style of charting that works for you. But a lot of the risk management ideas work across all of those methods. So really, we have the Bitcoin daily chart, and what just happened, right? We were moving up really nicely, pushing towards 50K, pushed up to 52K, and at that point, a lot of people were eyeballing, these recent highs, that lower high around 59, 60K. But I had been a little bit skeptical, and there were some things I noticed in the chart, and I'll walk you through them. And then were some things on Twitter, because I do a lot of sentiment analysis as well. If you think about when people are really excited, usually you want to be careful. But one thing I've noticed, so we have this brown line is a simple moving average. It's a 20-period simple moving average. A simple moving average, an exponential moving average, what is that? So a simple moving average means that every single one of the periods in that number has an equal weighting. So this is 20. So it means every one of these candles has the same weighting. These 20 last candles, an average of the price on a closing basis. The middle Bollinger Band. Exponential moving average, the green line, there's more price weighting, given to the most recent candle. It's more sensitive. So on this 20-period moving average, we're going to set the stage. We have the drop down, and then we had this rectangle. It lasted about 80 days, where you have a clear horizontal resistance at the top and a clear horizontal support area at the bottom. And remember, it's not just, when you think about support, it's not just an exact price. There's a little bit of a filter around it. So it's about a zone rather than just an exact price. So keep that in mind. So we broke out of the rectangle. And as you can see, pushed nicely, pulled back, just touched that 20-period moving average, right? Here we came back, came near it. Here we came back, touched it. Here we came back, now below it. Here we came back, closed below it. First close below the 20-period moving average, August 30th. First close below it, since, 31K area. So that was a potential sign of weakness. So you're saying, okay, I understand that nothing goes straight up. It needs to stop. It needs to digest. It needs to accumulate. So at that point, you're looking for other signs. All right. You have the price there at the 20 moving average. You have this high. Now this happened rather quickly, but you want to always pay attention to when a resistance level is broken and it comes back up below it, right? That's a fake out. Anytime like a support breaks and it's quickly recaptured, you want to pay attention to that. Like failed signals are powerful signals in the other direction. So we had that false bull break here very quickly. On lower time frames, this is a little bit more tricky, but there was something called a double negative divergence. Okay, I use the on balance volume. That's not Bitcoin. I use the on balance volume. This is a 4-hour chart. This basically adds up the green and the red candles. Some people use the accumulation distribution, but more or less, this should confirm the new highs. When you make a new high, it should be confirmed in the on balance volume. So if we'll kind of note here, and if we take, that peak we had here, okay, fine. Here's the next peak, unconfirmed. Here's the next peak right here, unconfirmed. So you have a double, you have two lower highs on this on balance volume, two higher highs in the price. That was a warning sign. That's a little bit advanced for some people, and I understand that. But there were some slowing down warning signs. For me, I saw on Twitter, people were really enthusiastic. And I put out a tweet and I noted it. And I said, just for the record, sentiment is really high. And then, so if you think about these short-term market tops as well, oftentimes Bitcoin will cool off a little bit and then Ethereum will run. And then Ethereum cools off and then Litecoin run. And I kind of felt Litecoin's run coming. I talked about it. Other people did as well, obviously. Litecoin ran. So it made sense that Bitcoin was near to slowing down. When you have Ethereum have its big run and then Litecoin, almost always happens that way. So there were some warning signs there. In addition, the last one I'll leave you with is a lot of people had monitored the head and shoulders reversal on the daily chart. Left shoulder, head, right shoulder. And you can have a little bit of a debate about where that neck base or the neckline is. But if you put it roughly around here, okay, when you put it right around there, what you're going to do is now that's going to give you your target, your price target when it completes, and it completes when it breaks below the neck base, is the height from the head to the neck base. So the head and shoulders completed its target. It dropped us down here into this rectangle. We broke out of the rectangle and we came back and we were retesting the bottom of the head and shoulders. So we have the concept in classical charting called a pullback. It's a bearish retest. You have support, you have fails. You come back, you do whatever you do. You come back and you retest it. That's a pullback, a bearish retest. The same thing is true for a throwback where you break through resistance, you come back and you retest it, right? Those are interesting ways to structure your trade. You can structure your trade that way. But the point I want to make is we had a topping pattern that played out. And when the price bounced, we were kind of coming back to the bottom of this pattern. So you're kind of on watch. You should be. I was expecting the price to slow down here. Why? 6 green weeks in a row, or 6 weeks of higher highs and higher lows. That's just not sustainable in my opinion. Any kind of run needs to consolidate. So there were some warning signs. And because we had those warning signs, we should have been paying attention and putting in our bids to buy at a key level. On the Bitcoin chart, we have the key horizontal level, the highs, January, lows of February. I'm checking time. We're doing well. Highs of February, January, low of February. And we had that 50 moving average, the 50 simple average. It was a big level because we had our first close below it back April 19th. That was a key warning sign that the price was going to head down, which it did. We had our first close back up above it here in July 25th, which allowed us to switch our bias from bear to neutral, and we continued through. So the point I'm making is, as you're setting your low ball bids, or even when the price is up here, we know there's warning signs. So you put bids to buy in this zone. It's a key level when resistance is flipped and turned into support, flip back into resistance, reaffirmed as resistance. You break through it. You're still paying attention to that level. So we had that flush right back to a logical level. We're still right there. That's the key level. So nobody knows if the bottom is in yet. That's the bottom line from where I'm standing, or rather sitting right now. We want to hold above 42K, 43K to build a run. Ethereum, perfect example of a low ball bid that filled. This MA50 and kind of this support here, middle of August. Price bounce, came back and found support here in this 3,000 area a few times. Even with the price up here at 3,800, you saw warning signs of Bitcoin. You saw Ethereum running. And if you're experienced, you're thinking maybe it's time to kind of get some of these scavenger type bids in. And you were able to fill it at 3,000. Now you're back at 3,400. Just a nice bounce already. Fred, let's take a look for any requests here before we kind of move on to the next part of what we're doing. And I'm just going to make a quick check here. You want to scan the chat room, see if there's any questions I can answer, or any chart requests, anything like that. I got Big Jonas. Our guest is coming up shortly. So let's give that about 6 minutes. We'll bring on our guest. I would like to just kind of talk to the people here and see if I can help answer any questions from the chat room. Please do hit like and subscribe. the Banter community is putting on this program for you. I hope you're enjoying it. I'd like to say thank you to them as well. Someone's asking, Marcy, where can you buy my book? It's available right now on Amazon. Trading Wisdom. You can also just Google the words Trading Wisdom. It's the first thing that pops up. Kindle and paperback format. I do always use Bollinger Bands, Sham. That's a great question. And I use them in a couple different ways. Use them kind of as a general sense of whether something's strong or weak. Trading near the upper Bollinger Band, it's strong. But if I'm looking to apply Japanese candlestick signals, so a bearish reversal candlestick, you want it to come at the upper Bollinger Band. So I'll try to find a good example here that really will kind of drive home the point. So let's pick one before I waste your time too much. Even right here. So we have what's called the tweezer top. So these two candles on the 15th and 16th of April, it's a two candle reversal setup where you have the price, rejected twice at roughly the same top. Doesn't have to be the exact same price. The candle bodies can be different. It's really about the wick or the upper shadow. And so that reversal signal, you want it to come at the upper Bollinger Band. It's not as powerful a signal at the middle Bollinger Band because that's kind of in the middle of the price action. So you want a reversal signal at the top and a bear reversal signal at the top because you want a bear reversal of strength, right? And you want a bullish signal at the bottom because you're trying to bullishly reverse the weak price action. So you can use Bollinger Bands for Japanese candlestick signals. You also can use them for in an uptrend, kind of short-term, what we call a mean reversion or or even a movement outside of a standard deviation. So the price is normally moving in between the bands. If it has a volatile move, often that dip below the lower Bollinger Band can be a buy signal. Jason's asking, explain trading pair, please. If I would assume you're asking about a USDT versus BTC, and based on whatever exchange you're on, whatever marketplace you're trading, you're often given that option. And really, if you think about it, like an ETH, I don't know if I have it here, ETH BTC is really just Ethereum versus Bitcoin, whether you think Ethereum is going to be stronger than Bitcoin. So I tend to chart the USDT ones for the most part, but it's really up to you what you want to play, whether you want to play a Bitcoin pair or an USDT pair. That's totally up to you. Let's see what else we have going on here. You sound like you're from the US. What exchanges do you use? So there's a lot of great exchanges available. We'll have that information for you in the comments after the fact. Why don't we get ready for our guest, Fred? Do we have our guest ready here to join us? Oh, hello.
Hello there. It's been a long time, Big Cheds.
It's been a long time. This is my good buddy, Big Jonas. I see we have, is that Next Generation in the background?
What? No. Yeah, I'm just hanging out in the loft, hanging out in my little apartment loft here.
Okay.
Cheds, I want to say congratulations on the new show.
Thank you.
Very impressive. Really happy for you. And congratulations on the book. It's truly a masterpiece. So congratulations on that. Thank you for having me. Hello, everybody out there. Appreciate being here.
I would say you are a masterpiece, if I may. Can I just tell the story quick of how I get involved in crypto? I was at your house. We were hanging out and we were lifting weights. No, we weren't lifting weights because we never work out. But I was looking at your phone and I saw you had Coinbase app, and this was early 17. And I saw, Ethereum, Litecoin, and I thought to myself, why does he have precious metals on his phone? Like that, it wasn't crypto. It was like he has metals or rocks on his phone, and that was like my introduction to crypto. And how did you get involved with it?
We've been trading stocks for about a decade now. And in 2013, the interesting thing about some of the stocks that we were trading, it was the first, these were like OTC stocks. And it was the first time where they were using Bitcoin as a reason for the stocks to pump. And I'm like, Bitcoin, what the heck is Bitcoin? And that was when I first saw it, when it did its first parabolic move, or not first, but the one in 2013, about $1,200, kind of kept in the back of my head. And then it wasn't until about 2016 where I got back into crypto and actually bought my first Bitcoin. And back then it was a little over $1,000, and kind of didn't think too much of it. But I was seeing a correlation with people I trade with, stock wise, starting to talk a lot about crypto and stuff. That's kind of where I got into it, and I was the first of our friend group, basically, to have those original early accounts with some of the early exchanges, and kind of was able to tell you about it from a trading perspective. And the thing about crypto that's so unique, coming from a stock market background, is the 24/7 365 trading availability of it. Obviously, the volatility. As a trader, we love to use volatility to our trading benefit there. And then the overall sense that the potential that this could be a whole new financial ecosystem. And we've been in this market here for a little over 4 years now, and I just think about how much this market has matured in many ways and is still very young in many ways. And what we're seeing now is a combination of things we've seen in the past, and then some very new and very exciting things that we're seeing in crypto, blockchain, and then all the derivatives of it now we're seeing, whether it be DeFi or NFTs.
That's a wonderful, really wonderful way to put it. And you kind of talk about the subject with a lot of comfort. I can tell that it's, you've been doing it for a while and you've been thinking about it. And I know you watch a lot of YouTube stuff, so you're definitely, I think you actually probably know the space better than I do, to be honest.
Well, it's funny. It's like, oh, here's a new aspect of crypto. Let's focus on DeFi. So I really started to get myself caught up with the DeFi community and universe. And then all of a sudden, this NFT thing, which has been around for still several years, kind of exploded. I kind of feel like out of nowhere. But you look at the volumes, prior to this summer, NFTs were a very small part. And then all of a sudden, we see this explosion in valuations with Ether Rocks and CryptoPunks and all these things that still to me make no sense. But then we're seeing the derivative of that, which is being able to access the NFT platforms with something other than Ethereum, which, if you know about this space, the gas fees are a common bane of most NFT traders' existence. So how do we get around that? Well, let's create a whole new ecosystem called Solana, and let's create a coin called Sol, and let's just have one of the most explosive bullish moves we've ever seen, of the explosive bullish moves that we've seen in crypto. And what's happening with Sol reminds me a lot about what happened with BNB, earlier in the year, when it was discovered as a much better on-ramp and cheaper on-ramp to DeFi, because the fees were significantly less than what we were seeing with Ethereum here. So we're at a very interesting time in this market where it's not just a Bitcoin-driven market. I feel I've been a Bitcoin maximalist most of my trading time. I'm really beginning to rethink this whole situation here. I mean, we have a Bitcoin dominance that's at 40%, okay? 40% Bitcoin dominance, which means 60% of all the money is in something other than Bitcoin. We've talked for years about the chance of the flipping, right? Will another coin's market cap eclipse Bitcoin? It's never happened. It's come, I wouldn't say close at all. And everybody thought Ethereum would be that number one candidate here, but I'm not so sure. I think a flipping could definitely happen, because you're getting more of a use case for alternative coins, for altcoins, than just the transaction of the sending somebody Litecoin, a way to send something faster. It's not the main driving force now, but by the whole altcoin situation here. So with Bitcoin, let's just take, for instance, that big drop that we had a couple days ago. You look at what happened in some altcoins. Some got crushed, right? And some, like Sol and a few others, bounced to a higher high.
Yeah.
So it just shows you that people are just shaking off, this volatile move in Bitcoin. And what Bitcoin is showing is that as long as it can stay relatively stable to bullish, right, within a trading range over a couple of weeks, the stability of the altcoin market is set, and people feel more comfortable putting money into those altcoins, and then you see them rising. So we are seeing the money is still here. There's a $2 trillion plus. We're back over $2 trillion in the whole market cap. I can't believe it was $100 million, just a year and a half ago. And now we've added $2 trillion to that. So there's enough money sloshing around the crypto ecosystem to be spreading out to certain areas. And, everyone's trying to find what's the next Sol, what's the next BNB, what's the next FTX. And there's probably several more, We see cycles, right? There are commonalities we've seen in cycles past when things pump. Cheds, we were talking about this few days ago. Litecoin. When Litecoin has that last pump, it always tends to mark the end of that bullish cycle because it's where the money is heading last. And if you've been playing the stock market for the past year, money is just over here and it's over there and it goes back over here. It's always there. It's just moving around. So if something has red day for a few days here, just wait, the money's going to come back into it. But what we're seeing now with Bitcoin at $46,000, we're not seeing anything that is other than the consolidation. Okay, we were at 65, we were at 30K, we just bounced golden pocket 61-65%, right, from our lows there. We've done this before. And I can show a few charts if you want me to share a screen or just keep on riffing here. Up to you.
Well, why don't you just give us a little bit more of a feedback, and then we're going to kind of wrap things up. I know we do want to bring you back.
Yeah, listen, there are two things that kind of stand out to me on the weekly chart. I'll just kind of say what it is. We have never had a touch of the MA50 on the weekly chart after a parabolic bullish move that has not that has not proved to be a bear market. So, for instance, in 2014, we touched the MA50. We had a beautiful bounce off it. It was a huge bounce, went from $400 to almost $700. We came back, touched it again, broke below, and that was our bear market confirmation. In 2018, in May, we in March, we touched the MA50 at a gorgeous bounce, thousands of dollars, came back up. Actually, we touched it first in February, but once we lost that MA50 on the weekly and back tested it, rejected on it, the bear market was set. So this is the same setup that we're seeing right now. We have touched the MA50 for the first time. We've had our nice bounce off it for the first time. And now we're going to see what happens. If we lose the MA50, that would be correlated with what we've seen in past bullish markets. Another thing that I know you love is the death cross, the famed death cross. I'll just say one thing about it. When we have a death cross on the daily chart, after a parabolic bullish move, it has always led to a bear market. Now, sometimes we do have a temporary golden cross from a bounce, which we did back in 2014. We never actually got that golden cross in 2018. But every death cross after a parabolic move has led to a Bitcoin bear market. Now, there was one thing in 2013 where we actually came very close to getting that death cross, and we didn't do it. We ricocheted off and continued on to $1,000. Not the case this time. So if history is a barrier, we are still in a bear market. Now, a bear market with all this money flowing into altcoins is exactly what we saw in the consolidation of 2018. Remember, there were altcoins moving while Bitcoin was slowly trickling lower, trickling lower, and trickling lower. For now, we are beginning to set an equilibrium. Be very curious to see what our weekly candle looks like. Right now, it's not so good, but it could definitely set up the next several weeks of price action, which historically would suggest bearish price action after this potential dead cat bounce.
So just to explain a little bit, equilibrium, you mean the battle between the higher low and the lower high and the higher low. So the tightening range after a big move, and then you get a kind of a pivot point. Is that kind of what you're saying?
Exactly. If you want to look back to previous bear markets, we tend to have a very steep correction followed by a bounce that could be between 60% and almost to 100%. And then a fade that gets more pronounced as time goes on. So for now, we're doing something very similar, but we have our equilibrium set, 65, 30. Now we're at 54, which
Mm-hmm.
means we can go 37, 38K, maybe 36K, and
Healthy.
still be holding the higher low. And that is very healthy from a
Mm.
technical charting pattern. Personally, the MA50 right now on the weekly is just a hair below $38,000. So I can be very bullish still with Bitcoin and just feel we're just kind of retraced a little bit after going up 5-6 weeks in a row. But if we start losing 37, 36, and especially if we put one more weekly close below that MA50, I think we're going to go much lower. And last thing I'll say is, if anything has taught us anything about this market, we're on Twitter, we see what people think. Anything can happen with Bitcoin. In my wildest dreams this year, I never thought I could hit 65K, and everyone's saying to themselves, oh, we'll never go below XYZ because these certain metrics, on-chain volume, financial institutions buying Bitcoin, all that stuff will never let Bitcoin go this low. We had this dump a few days ago, and I think one of the only things that really stopped it is the fact that all the exchanges went down. Was it because they were overloaded? Could be. Or was it because they realized this was a cascade of liquidations that could go much lower, and they needed to stop it? Little shady. The rich people, the whales in this space, still
Hold on, hold
control.
on. Is it shady? It also stopped at a logical level. It stopped right at 42, 43K. That was the key horizontal that I've been talking about, and a lot of people talked about. So is it
Yeah, it was a
coincidental that
great
it stopped at the
moment.
level? I mean,
It was a great moment to hit the switch, because
yeah, right.
if we didn't stop there, then they'd be very suspect. The whales still control this market. 95% of all crypto is owned by 5-6%, I mean less even, of the entire people. So we're just pawns. We're pawns. We're retail pawns being bombarded through this whole market here. But there's tremendous opportunity now that we have a $2 trillion crypto market versus a $100 billion market. There's enough money to go around and around. What I will say to you, if you've been riding Sol this whole way, if you've been riding some other coins, if you're looking to continue to dollar cost average into your portfolios, all this is great. Just keep in mind, this market can move very quickly, and there's nothing worse than having tremendous gains on paper, but not actually actualizing them into real, profit taken. And as a traders, whether it's stock traders or crypto traders, taking profit all the way, learn to trade, live to trade another day.
Wise words. Where can we find more about you? If I'm watching, first I've heard of Big Jonas. Where do we find more about you?
I'm here and there. I'm out there somewhere. I do have a Twitter account. I do have a YouTube account. As we approach the winter months, it'll be inside more. I'll probably be more active on my social medias, sharing my thoughts and idea about Bitcoin. But just remember, Bitcoin is here to stay. We are at this very young market, but it's maturing, and these are the growing pains, right, that we have to experience. We have to evolve. We're at a point now, though, with enough money in this ecosystem that there's opportunities everywhere now. Just be smart, don't overextend, and don't over leverage. I love leverage trading, but you don't want to set yourself in a position where the volatility can just destroy you. Hundreds of thousands of crypto accounts got liquidated by that dump we had a few days ago, whether they didn't have the proper stop loss, or everybody had their stop loss at $50,000, and as soon as $50,000 broke, the cascade began. That's more or less probably what happened there. But think about that, and also think about the mood. If everybody's bullish, if everybody's just laser eyes and Lambos, stop and pause for a second. Be the contrarian in the market. The contrarian view tends to be right more often than not. And then be patient. Chance, we were talking about a coin I was interested in, and I was into it and everything. And if I only waited, if only I decided to put bids in my original area where I wanted to purchase it, I would have had them filled, in that huge wick we had a few days ago. So just be patient. Don't feel like you just missed that generational entry. Bitcoin is offered lots of opportunities. But I think this market is forever changed now, with the sense that altcoins can do a heck of a lot more than just transact, right? It was always a faster Bitcoin, a faster way to transact. And now it's a way to buy NFTs. It's a way to invest in DeFi. It's a way to stake and earn yield and APR. So when the use case of altcoins becomes more real, then their values can be more justified. And I think we're entering a new phase where that can be the case. Then you combine that with just a bunch of billionaires who have no problem throwing around, tens of thousands to millions on JPEGs and GIFs, then this is the market that we're into. So, hold on tight, stay for the ride, but plan for this for the long run. There's nothing wrong with building small winners to build your account. You don't have to hit that nut top and 50 exit. I like to use leverage, but I'll do a 5x or a 10x and give myself a wide berth of a stop loss there. So I'm not going to crush my account. There's tons of opportunities every day. So be smart and patient and play for the long run, and don't get caught in the FOMO. If you've missed certain entries, I missed it. Soul, just wait. You'll always get opportunities, and so they happen quick sometimes. But if you're smart and patient and put some low ball bids, you might get filled.
I love it. We're so happy you decided to join us for the first episode of Trading Wisdom. That is Big Jonas. He's on Twitter at Big Jonas. He's on YouTube at Jonas Trading. We'll have you come back if you'll come back.
I appreciate it. Thank you for the Banter community. Thank you for Rand and Sheldon Sniper. I appreciate you guys having me on the show, and best of luck to you, Cheds. This was an amazing show. I'm excited to see some of the guests you have in the future as well.
All right. Thank you so much, Fred. Let's kick it back to my screen. We'll wrap things up. Just to remind everyone, you can find me, of course. I am on Twitter at Big Cheds. That's probably where I'm most well known. I tweet out academic observations on the chart, key levels to watch. I monitor sentiment, trading psychology. This show is Trading Wisdoms based on my book. It's done really well in large part thanks to the Banter community. I want to say thank you to the Banter community, to Fred, Rand, and Sheldon, and all of you folks. Please hit that like and subscribe button. This book, 50 Lessons Every Trader Should Know Trading Wisdom, it's available on Amazon right now. It's had excellent reviews. Please check those out. I'm also doing a free version of the book. Someone had asked, is it for new people? It's for all traders. I tried to accommodate all trading levels. So absolutely a new trader would love this book. You definitely want to check out the free version of the book on my YouTube channel, Cheds Trading, under the playlists, Trading Wisdom. So I'm doing one chapter at a time for free on my YouTube channel. If you're interested in learning about technical analysis, I am CMT1. I teach candlesticks and classical charting. I would encourage you to check out Bitcoin Live, the best-in-class educational platform for crypto. I'm very proud to be a founding analyst there. I do twice a week long-form premium updates, and I'm just really proud of it. Once again, thank you to everyone. Please, guys, hit that like, hit that subscribe button. This is Trading Wisdoms. I hope you've enjoyed it. I hope you've gotten something out of it. I've been where you are. Trust me. Keep hanging in there. Keep grinding. And until next time, Big Cheds out.